Hey there, welcome to Neppy Invest. Part 2 of my ASX stocks that I'll be watching in December 2020, and more than likely some of these companies I'll be watching even into 2021, possibly even further in time. So let's get stuck into it. I'm trying to make this video crisper and cleaner and quicker. So first company I'll be talking about is Treasury Wine. Been in the news the last few days. In fact, I've been in the news the last few months, almost the whole year. So the chart on the left is a 3-year chart. And not really good news, not really good looking chart for long-term holders. Share price got to as high as $20 back in early 2018, and ever since then, share price has gone backwards, especially this year. In fact, start of this year didn't come out good news for shareholders when the share price took a massive tumble just before COVID-19 hit. And then COVID-19 just exacerbated the problem with the Treasury Wine share price. So share price went from $17 all the way down to almost $8. We did see a little bit of a recovery, or the share price starting to recover. In fact, the August results, there was a bit of bullishness within the results, but then the Chinese government happened. And I'll talk about that in the next slide. So market cap at the moment, 6.7 billion. Good revenue and operating cash flow, fairly good there too. So if you don't know who Treasury Wine are, they have a lot of, they produce wine, but they own Penfolds, which is probably the most famous Australian wine brand there is, and they export that throughout the world, particularly into China. So China is their biggest market, and I'll talk about that in the next slide. So the reason I'll be talking about that in the next slide is the two massive price hits in the last 4 months have been because of the Chinese government and some of their stuff they've accused Treasury Wine of doing, and then some tariffs they introduced. So as I mentioned before, it looked like back in June, July, or into August, it looks like the share price was recovering, and then in fact, in the results, the share price actually gapped up because it was quite bullish on the results. And then 3 days later, the Chinese government accused Treasury Wine of dumping wine into the Chinese market. It was, I don't want to say it was a ridiculous accusation, specifically because Treasury Wine margins in China are significantly higher than the rest of the world, and if they were dumping wine in China, those margins wouldn't be as high as they were saying they are. But anyway, the share price took a big hit. I bought in on the gap up and then sold straight away on this news. And the main reason is a lot of uncertainty moving forward, because you don't know what the Chinese government is going to do in regards to regulations. They're quite unreliable in that regard. So I decided I don't want to trust, I didn't want to, have my money in a company where I couldn't trust the share price movement, because it was actually based off what the Chinese government was going to do. Share price went down as low as $8 at the start of November, and then it rallied really well for about 3 or 4 weeks. So it went from $8 to $10.50, and then lo and behold, at the top of that rally, the Chinese government just announced they're going to put 200% tariffs on Treasury Wine's products into China. The cynic in me would say, the skeptical, or I should say the conspiracy theorist would suggest maybe there was a reason why. You can see the share price, when it was regaining strength, that's when the Chinese government came out with bad news against Treasury Wine. And the conspiracy theorist in me would say they're doing that for a reason. And the main reason is to suppress the share price so a Chinese company can come in and put in a low bid for Treasury Wine, the whole company. And that's how China can buy out Treasury Wine. That's the cynic in me, the skeptical sort of part of me coming out, the conspiracy theorist part of me coming out. But they've done this before, the Chinese government. I just really can't trust them. And in fact, I'm trying to now get away from companies that are very overly reliant on the Chinese market. And the good news thing, today, Treasury Wine have come out and said they want to become less reliant on China, and that can only be good. Become more reliant on the rest of the world, become less reliant on China. That should be the news out of this, the story out of this. We don't want to become reliant on China moving forward, and that is the country as a whole. Caran Energy. Let's talk about a good story here. So Treasury Wine, bad. Caran Energy, good. So this is a company I've been following for a long time, and the main reason I started following this company was the amount of cash they had on hand. So long periods of time, the amount of cash they had was exceeded the market cap. And usually when that happens, good things usually happen, but it always depends on how good management use or utilize that cash on hand. So Career Management have done an acquisition about 4 or 5 months ago. It's a producing acquisition in some offshore oil producing in South America, somewhere like that. So it's producing. So it's something like $400 million of money they spent to make this acquisition. And with this acquisition, they've become the 5th largest ASX oil producer, I believe, if I remember correctly. And they've still got over $100 million cash on hand. So they've made this acquisition and still got a lot of cash on hand. So that's the good fundamental news. But then you look at the technical here, the beautiful, this is absolutely beautiful uptrend. If you don't know what an uptrend is or how to develop an uptrend, all you have to do is get some lows, connect a few lows. So there's, whoops, there's a low, there's a low, there's a low, there's a low, almost a low there. And all these lows you can be connected by one line, and that's the uptrend. And so what you do is you buy near the uptrend, and then whenever the share price is above the uptrend, you don't sell. And as soon as the share price gets below the uptrend on a few days, that's when you might sell. And at this point in time, Caran shareholders would be very happy because a definite uptrend developing here, or has developed over the last 3 or 4 months. And the fact that they've made this really good acquisition, let's hope it's a good acquisition. It's looking very bullish. Be very excited if I was a Caran shareholder. I'm not. And I am looking at Caran a little bit closely. In fact, I'm going to go through this acquisition with a finer comb just to have a look. I'd like to see some financials first out of it, but very exciting times for Caran Energy, and that's the reason I'm following this company, is because sometimes acquisitions can be significant for a company, transformational for a company. And just look at Northern Star when they did the acquisition in 2010, when the share price was 5 cents, now it's like $18. But not saying it's going to happen with Caran Energy, but this could be a transformational acquisition. Integrated Research, this is a company I've held in the past. I bought about $1.20 a few years ago. Share price went through a really good uptrend. You can see it start here. Went from about $2.50 all the way up to almost $5. Share price has really pulled back over the last 3 or 4 months. In fact, I've drawn this horizontal line, which is a level of support, or was a level of support. The share price has gone through it on really good volume, which suggests that level support has been broken and may now turn into resistance. So just keeping an eye on Integrated Research to see what happens with the share price moving forward, because if the share price falls much lower, say towards $2, it could become a very interesting or good buy just based off valuations. So that's the main reason I'm keeping an eye on Integrated Research in December and possibly as we go into the start of 2021. Blackmores. Okay, so this is a really interesting story because I always use Maurice Blackmore as an example why you should not sell out just because the director has sold out. Not sold out, but has sold some of his shares. So I think about 7 or 8 years ago, Maurice Blackmore sold some of his shares at about $20 or so to buy a yacht. Share price went from $20 to $200. So if he held on, was a little bit more patient, he could have actually bought 10 yachts with the amount of money he'd made. So the market was very bullish with Blackmores, and they had a Chinese story. They're going into China, they're going to make a lot of money selling their vitamins, or vitamins if you're English, into China. But, there have been negative news, negative results over the past few years, and their share price has taken a hit. Seems like over the past month or so, it looks like there could be possible developing uptrend. It's not the best looking new uptrend developing because the moving averages, those 3 lines I've got there, the blue, red, and black, those are moving averages, and I prefer to see those moving averages come together before we start to see an uptrend. They haven't here, they're all over the place. So I want to see what happens with the Blackmore share price over the next few months to see if this uptrend can be confirmed. I haven't really confirmed it yet. And also the other thing is we've seen lowering volume. Possible breakout was on higher volume, but low volume over the last month or so, which suggests to me there's not a lot of interest in the share price moving forward, which suggests there's a bit of weakness with this price going up, which suggests this is not the start of an uptrend. But I can be wrong. I am always wrong. So I've just put this on the watch list. I just want to see what happens with the share price moving forward over the next few months. Rio Tinto. So if I remember correctly, this is the second or third biggest mining company in the world. So if you don't know who Rio Tinto is, are you sure you're an investor? Anyway, so Rio Tinto's share price is highly correlated to the iron ore price, which I've included there on the bottom there. So this is a 15-year chart of the Rio Tinto share price. You can just see it's very highly correlated to the iron ore price. The other thing that's really interesting to me with Rio Tinto's share price is we've seen the share price get above $100. It's very rare to see the share price of Rio Tinto get above $100. It's usually when the iron ore price is quite high. You can see back in 2007 and 2010-11 when the iron ore prices were at their peak. That's when the Rio Tinto share price got to its highest points. We've seen that now. Now, their iron ore price hasn't got to those peaks we saw in 2007 and 2010-11, which suggests to me the Rio Tinto share price can run a little bit more before we see those tops, especially if the iron ore price continues running. So this may not be the peak in the Rio Tinto share price. So when I buy commodity-driven mining stocks, I like to buy when the underlying commodity is at the low, so at the bottom of the cycle, and sell when it's the top of the cycle. So at this point in time, Rio Tinto's share price and the iron ore prices, I can't really say at the top of the cycle, maybe not yet. It could be, but maybe not yet. I'm not a buyer of Rio Tinto. This is just sort of an interest to me to see what happens with the share price, because I think if the iron ore prices run from here, we might see the Rio Tinto share price get to new highs like $120, $130. It is possible. Keep an eye on the market cap too. There were some sites I saw which had the market cap of Rio Tinto at $37 billion. That's way too low. In fact, if it was $37 billion market cap, I'll be buying this tomorrow, but it is $165 billion. I don't know why, because how do I know that? I went to the annual report and I just looked at the amount of shares on issue and times that by the share price. Voila, market cap was $165 billion. I don't know why some sites have it $37 billion. It's an interesting thing for me. This is just the yearly share price action. So whenever the share price gets to about $105, share price always seems to retreat. So it'd be really interesting to see the share price push through $105 on a really good volume. That would be fairly bullish and actually could be a good short-term buy if that sort of thing happens. But at this point in time, I'm not going to be buying any Rio Tinto shares or any iron ore shares. I'm more interested in other commodities at this point in time. So that's all I've got for this video in part 2 of ASX stocks. I'm watching December 20. I'm quite parched. I need a bit of liquid. So that's all for now. Have a good day. And again, I'm not a professional advisor. So if you do need to seek professional advice for your own financial circumstances, make sure you seek out someone who is qualified. That's all for today. Bye. See ya.